Hey everyone, I'm Charting Man Dan of the Chart Guys. In this video, we're going to go over our indicators and going to describe essentially the creation of these indicators, how they can be utilized for entries and exits, as well as staying in trades, and just give you some insight. Many of you have some of these indicators that have been included in membership deals and things like that. But just a little background, it's been an enlightening process creating these indicators just because it requires me to get out of my head as a trader. Essentially what we were looking to do, most of these indicators are created from my style. We have Lori's indicator, which we'll look at, a couple other ones, but it's essentially, having to quantify something that, otherwise I'd say, for example, I'd say a daily high or low is the most likely scenario. Years ago, someone would say, what do you mean? My brain says that it's the most likely scenario from my experience. That doesn't really help someone else. So I then had to use Fibonacci's to be able to quantify and say, when this happens, this is the most likely scenario. So it's the same thing with these indicators. I can say, why did you buy here, Dan? Well, I bought because we were at extremes. What does that mean? What do you mean extremes? I have to be able to quantify. And so it created a system where I, as the trader, take my experience and I then have a conversation with other Chart Guys team members who are traders and developers. And it's almost like translating what's in my brain into a code that can then be quantified and then utilized by other people, of course. None of these indicators are a fix-all in terms of just do this and you're going to be a profitable trader. As we know, it is a factor of things. And I'll talk about confluence of signals, which is important for us to have a higher conviction on certain setups. But let's get into it. First things first, this is the website. So chartguys.com/indicators. There's a ton of information on this website. So make sure and check it out after this stream. Of course, again, the 20% off sale. But every indicator, if you click on it, there's then a video specific to that indicator explaining it. So I'm going to explain it in this webinar, and then myself or someone else is going to be explaining it in a different way with different examples in this video, and some written out examples and charts and things like that. So definitely worth checking out the website as well. And I posted that link in the chat if you scroll back a bit, and I'll post it in the comments once this video is complete. So again, another good resource to utilize for more information, to learn about these things. All right. So first things first, we're going to talk about the back burner. How many times have you heard me say back burner at this point in our lives? It is my favorite. I have made the most money in my trading career utilizing the back burner trading strategy, and it is ideal in strong trending markets. I use it a lot more in bull markets, buying dips. The reason being, my trading career of 14 years, we've been in a bull market the vast majority of the time. It does work for bears when you are in a trending bear market. In the 2022 bear market, we were using it on the way down because we were in monthly, weekly, daily downtrends. But when you're in blue sky breakout, there is no better indicator for making an entry. And the reason I call it the back burner is because you don't want to chase something that's going straight up. So you put the trade on the back burner, you wait for it to come to you, and then the conditions set up, and you make the entry patiently, entering on consolidation to have better risk reward rather than chasing. So at this point, we turn on the indicator. This is RGTI. So this is your quantum computing stock that has run straight up to the tune of 1,000 to 2,000% over the last bunch of months. And the last thing we want to be doing is chasing a name like this, because when it pulls back, even healthy consolidation is a 20% drop on this name. So just an example, hourly, we turn on the indicator here and we can see what's this what's this red line? This red line means the indicator is active. It's not just hitting oversold conditions. What's coded in is the context. We have to have certain parameters reached in a breakout for the signal to be active. And then once it's hit, it's no longer active for a while until the conditions reset. So here back in, when was this? Thursday, December 19th, we were in a blue sky breakout run. We're coming from all-time highs. We hit first hourly oversold conditions. And then from that point forward, we see another 200%. Now, obviously not all of these back burners are going to see that kind of follow through. Generally, my style of trading is I enter into a back burner, I sell partial into the initial bounce, and then I stick my stop under the low, break even, because in our strongest uptrends, that will mark a longer term higher low and we will see continuation. If not, I stop out, low risk or break even. And there's, works on all time frames. If you're a swing trader, all these indicators, if you're a swing trader, you're just focusing on longer term time frames, weekly, daily, 4 hour, hourly at the shortest term. If you're a day trader, hourly, 15 minute, 5 minute, even down to the 2 minute. But the hourly was a great one here. You go to the 15 minute. What if it triggers an extended hours? I always have extended hours on. For me, it just means it's not the ideal scenario. The ideal scenario is when the back burner triggers in regular trading hours. I'm not going to buy in extended hours, generally speaking, if it hits, but it just means to me, if it's not ideal, what does that mean? It means if I'm really conservative, I skip it. I don't take that trade setup and I wait for something on a longer term time frame. If I'm aggressive still, or maybe it means I use a smaller position size. There are multiple different ways where if it's the ideal scenario, I'm more aggressive, or if it's the less than ideal scenario, I'm less aggressive. So on this day, back December 30th, the 15-minute back burner triggered pre-market, but the 15-minute oversold conditions from regular trading hours still had a monster bounce on that morning. So it was just a less than ideal scenario into that 25% bounce. But again, I do like extended hours on. I always have it on, and it just means ideal scenarios or not. So I still pay attention to it. And again, sometimes it will mean, all right, 15-minute triggered pre-market. I'm not going to take the 15-minute oversold trade because I'm being conservative. Or if I'm going to try it, maybe I'll do it with 2/3 of the position size that I otherwise would. But again, can't speak highly enough of the back burner. Easily my favorite trading strategy, which means it's easily my favorite trading indicator. And again, when you're in a strong trending market, as we have been for the last 2 years in the broader market, it is prime time. It's how I made the most gains in 2017 crypto. That's what led to me creating this as a strategy, and then eventually led to me creating it as an indicator, again, with the help of coders who know a lot more than I do about coding. So, backburner is my favorite. Next, we're going to talk about superstack. This is our newest indicator. Turn off backburner, turn on superstack. So let's talk about superstack first before we look at it. Superstack indicator is essentially when you are at extremes across a multitude of time frames. So if it triggers and you're on the hourly chart, it means you're at certain conditions on the hourly, the 15-minute, the 5-minute, etc. If you're on the 4-hour, that means it's triggering on the 4-hour, the hourly, the 15-minute, the 5-minute, etc. So the longer term the time frame, the more aligning all of these shorter term time frames are. Why I like this indicator and this signal is because, again, it shows extremes. I look for it as an entry point. And I one more thing I got to say about backburner. Confluence of signals. Quick recap. I forgot to say something. Pause there. All right. So RGTI, confluence of signals, hourly, first oversold backburner on December 19th, aligned with daily EMA 12. That's an ideal condition. I have more conviction in a back burner that is aligning on a longer term, looking for a higher low. It's hitting an EMA 12 support, and the shorter term time frame is firing a back burner. That's when I'm most confident. And so that was an example of RGTI. Confluence of signals means you have higher conviction. All right, apologies. So superstack, a bunch of time frames aligning. And why I like this signal is because let's say we're 4-hour superstack oversold extremes. Even if that doesn't mark a long-term bottom, I know that we will likely at least see a short-term bounce. Even if we don't see the 4-hour bounce play out from that point, I know we will likely at least see a 15-minute oversold bounce play out from that point. And with my trading style, that means, if I enter my position, I scale out partial into a shorter term bounce because it is counter trend. It's just extremes, counter trend. And then that makes me in full control of the trade by being able to, so it tells me essentially you'll likely at least get a short-term bounce to position with, even if it's not the longer-term bounce that you're looking for. And so that is key. One thing to note with both of these indicators, Backburner and Superstack, if there's a headline in play, less than ideal scenario. Doesn't mean it won't work. It just means it's not ideal. The ideal scenario is when these conditions are hitting and there's no news in play. There's no headline that's causing a massive drop. You know, if Tesla gets news that 100,000 cars just blew up, the Superstack's not going to work on the hourly time frame because that's big, major bad news. So just be aware that you want to be aware if something is headline related or just the technicals doing their thing. So Superstack, there's a number of components here. When you're looking at certain time frames, if you're looking back historically, which is important, you want to see how does this indicator work on whatever asset or ETF or stock that you're looking at. How does it play out historically? You want to be zoomed into the shorter term time frames because the 5-minute is a factor in every time frame, and you can go back and look at, it essentially gives you a more complete picture of all the different time frames that have been triggering. That said, this is a heat map in the top right corner, which essentially gives you a glimpse. This is telling me the RSI on all these time frames. So, our RSI on RGTI, the monthly chart, 87, the weekly chart, 98. That's telling me we're still at extremes on the longer term time frames, even though short term, we're not at extremes. So that's a bit of a way to keep a glimpse of things and to be, watching. And another aspect of this, of the Superstack, if you go into the settings, I can put on the chart, just like the Backburner is the line that shows you where it will trigger, you can put that on the Superstack as well. So let's just say RGTI, I want to know where the hourly Superstack would trigger. There's my line. And so I could say, all right, we would need to drop down to the $14 range if an hourly Superstack were going to trigger from where we stand at this point. So let's look at a couple examples. First one being RGTI. Going to turn off that line for the moment. So RGTI, let's go 5-minute on December 30th to show us the 15-minute Superstacks. So this was the one where the Backburner fired in pre-market. So did the Superstack. So again, not ideal for it to trigger in pre-market, but it also triggered in regular hours as well. And the 15-minute Superstack oversold, ended up with a 25% bounce. And then we hit the 15-minute Superstack overbought. So what does that mean? That means the 15-minute, the 5-minute are both at extremes. That marked the high of the day. And we then pulled back 7%. So essentially, it can help you if you're in a longer term uptrend. The shorter term timeframes can help you buy the longer term higher lows like a Backburner can. But it's also good for, hey, maybe it's time to take some profit. So for example, XLM Crypto had a monthly Superstack fire, and we're going to look at it on the hourly. So the monthly Superstack fired on the way up. Again, complete bull control, massive breakout, running hundreds of %, and it triggered in the 44-cent range, and it didn't mark the top, right? I'm not just going to cherry pick examples and find the ideal, we nailed the top and bottom on. No, that's not how it works. This tells you, hey, it's probably time to start thinking about taking some profit. If you're getting a Superstack of overbought conditions when you're riding an uptrend and you've got some nice long-term gains, that to me means start scaling out some position. So let's say, you exit a quarter at 45 cents, a quarter at 50 cents, and then you let the rest run. It didn't nail the top. We kept running a good bit further, but you zoom out longer term and we ended up pulling back, back down towards 30 cents. So from when it initially triggered, yes, we kept running, but if that's your signal to start scaling out some profit, then a couple weeks later, we're down, 30% from where that trigger happens, or 45% from the actual high that was hit. So if you're getting a Superstack overbought while you're in a strong uptrend, take a little bit off the table, perhaps, because again, the monthly superstack tells you we are at extremes on the monthly, the weekly, the daily, the 12-hour, the 4-hour, the hourly, the 30-minute, the 15-minute, the 5-minute, all at the same time. And that is extreme euphoria. I'm going to use another example here, the energy sector. So I recently played the energy sector long for the first time in a very long time. And the reason that I did so, again, I didn't have the superstack indicator up when I'm looking at this trade. These indicators came from my brain. I've got the superstack hardwired in my brain through experience. So I knew the daily chart for XLE was getting very extreme. Straight drop from the highs, almost a waterfall drop. Again, the daily RSI at that point, down in the teens, and everything oversold. And so that tells me start looking for a long. So daily superstack fires in the 83s. We end up getting a little bit more downside, another day, another percent or so, less than a percent, about a percent, into the 82s. And that marks our climax bottom into this oversold bounce. So again, just ideal scenario of extremes. Was there a headline to point to for the entire energy sector? I'm sure you could come up with something as the narrative that was driving things, but there wasn't anything that told me, don't take this trade. Another factor, confluence of signals, extremely oversold on all these time frames, coming up to support. This was the most important support level for a long period of time. And we came up right to it in extremes, didn't quite test it, and now the bounce underway. And again, with my style, take partial profit, I now have still in 3/4 of this swing position. My stop is under this low, and I can't lose unless there's an insane gap down on the world ending. So partial positions, confluence of signals with some support. I just noticed this was a good daily. I wasn't even paying attention to the overbought signal, but daily superstack overbought. Again, didn't nail the top. We stayed above that signal for another week, but that was then a long-term top into months of pullback. So again, it works in both directions. When you just run straight up, hey, maybe take some profit. Again, not necessarily, hey, aggressively short, but take some profit, then the top is hit. Essentially, it tells you, pay attention to a reversal. We're getting extreme. All right, next one. So again, that was the superstack. We're now going to go historical RSI. So this was a tag team effort where, again, I utilize historical RSI in my trading strategies. I'm Jungle Funk's Joey's mentor. And then Joey helps working with, our developer team to code this. So essentially it went from my brain to Joey's brain, Joey translating to our developer, and then our developers putting this together. Again, same thing. These are different veins of the same concepts. The difference is the back burner is the first time an oversold condition is hitting in a strong trend. The superstack is a bunch of time frames aligning when you're at extremes, and the historical RSI is when you're at extremes. And I've used this plenty in my trading. And again, just using XLE as the example that we have up here, we can see the way this works is the band, these blue bands, the extreme of the band is the highest it's ever hit in all of the available data. And depending on what trading view plan you have, that's going to determine how significantly far back your data goes. So just be aware that that's perhaps a constraint on how much data you have. But XLE, the topmost blue line, is the highest RSI that's ever been hit on the daily. And then you have the channel that's telling you this is, we're getting there. And you can adjust things as always. You go to the settings and say, well, okay, this is showing me a 5% channel where we're getting within 5% of the most that we've ever had, looking back 1,000 candles. But maybe I want a little bit more. Maybe I want 10%. Let me know when we're getting within 10%. So that just widens the channel a bit. That's up to your personal preference. I generally want it to be more extreme, so I'll leave it on 5%. But again, Here's the energy sector. Didn't quite get to that 5%. We came really close. But again, just historically, you want to look back. What happens every single time that we've got XLE daily RSI getting into this band of the most historical? I mean, happens in 2020, happens in 2019, happens 2014. It essentially, again, it doesn't necessarily mark the bottom, but it allows for positioning. So let's go back here to 2014, energy sector. Here's an example where we hit a new all-time high RSI right at the top before massively rolling over. This was the most extreme the daily RSI has ever been in its history. Again, didn't top out right away, but over the next couple of weeks, it was a topping out pattern that then rolled over. The downside, again, did it mark the bottom? No. We got down right to that range and almost the most extreme daily oversold ever right here. The bears had a lot more follow through over the next 6 months from that point, but it let you know we were at extremes enough to position for a short-term bounce. Again, you get in, you sell partial, knowing your counter trend, you stick a stop under the low if you want to try for a long-term bottom, and then you stop out, no biggie. If that was your game plan. You know, it had a 10% bounce, plenty of availability to position within a 10% bounce. It didn't mark the bottom because the RSI cooled off on the 10% bounce, and that did allow for further downside. So again, you got to be positioning. This isn't we're going to nail the bottom and then go up for years from here. You still have to be a trader and be doing the correct things in terms of scaling in, scaling out, limit your risk, place your stops, all that. But again, it's a great way for aligning extremes. Again, back here, here we are hitting the extreme daily overbought band. That marks a long-term top. I'm sure there was news involved on that drop 2018, or that was probably the market. Market had a big drop there. It's just a really nice guide of the extremes of the extreme. Here was another one. Again, when you get into that band overbought, that marks a long-term multi-month top. All right, historical RSI. Next one, I'll look at questions. Feel free to ask questions in the chat. I will get to them when we are done here. We're getting there. All right, so next one is the Trade Keeper. Lori came up with this one. Again, on our website, go watch the video. She has her explainer video explaining her indicator. The Trade Keeper is, so the three that we just went over are essentially looking for entry and exit signals. The Trade Keeper is designed to keep you in a trade. One of the main things that traders have an issue with, I cut my winners too soon. I don't cut my losers soon enough. I wish I kept a runner. That was definitely, years ago, one of my top criteria of wanting to improve as a trader was keeping runners to let longer term time frames and longer term trades play out. And so the Trade Keeper is designed to do that. It utilizes ATR and it utilizes Keltner channels. And let's just use some examples. NASDAQ, turn on the Trade Keeper. So we've got a bunch of dots. Now, the Trade Keeper indicator is not going to be helpful if you're in a choppy sideways market. If you're forming an equilibrium and chopping around, you're going to be getting long and short signals flipping back and forth. This is for trending markets to tell you essentially, hey, stay in. There's no reason to be selling yet. And the way this works are these green dots. Colored dots. So the green dots mean long. And this is the 5-minute time frame of the NASDAQ this past Friday, right? So we start strong. We do see some weakness, but still green. Don't sell yet. We're not ruining the structure of the uptrend. And then the bulls keep full control. Green is long. Purple means caution. Purple means we're losing moving averages on a longer term time frame. So it's essentially saying heads up, we might flip here. And then we go red. Red means sell. So here would have kept you in long the entire morning, and then it would have had you exit towards the end of the day, but that's when things shifted. That's when hourly consolidation began for the NASDAQ after running up all day. And so purple means heads up, things are shifting. Red means short. Yellow, let's find some yellow example. So yellow just means, again, this is an overnight session, so not as ideal, but yellow means we're getting extended. So yellow means we're extending significantly below the Keltner channels. Doesn't mean sell, just means we're really ripping on that trend. So again, here's your short. Red means short, purple means caution, we might flip to long, we might flip to long. Nope, not flipping, not flipping, roll over. Yellow means we're extending far down. Doesn't mean exit the trade, just means, maybe you want to take some profit into some extremes, but then the red stays red. Stays short, stays short. All right, things reversing a bit. Purple means heads up, we might be reversing. And then the green says, yep, now we're long. So again, just if you struggle to ride trends and let runners run, this indicator is designed to help that. And again, all time frames. If you're a swing trader, you use it on the longer term time frames. And if you are a day trader, you're using it on the shorter term time frames. Go check out Lori's explainer on the website. The last one is Mountain Mark Trend Scout. So this one was created by a longtime Chart Guys member, Mountain Mark, and he is a coder and a trader. So he came up with his own indicator. I'm not going to go in depth explaining this one because it didn't come from my brain. But it is more designed towards essentially, if you struggle to identify the pivots, the higher lows and lower high pivots, it essentially marks them out for you. It, marks key pivots on longer term time frames. So right now I'm on the NASDAQ daily chart and it's telling me where the most key weekly pivot is. It's 19% to the downside. The key monthly pivot is way down there because we've been running hard for years. But essentially, if you struggle to identify the higher lows and lower highs, this can help with that. I would certainly suggest, prioritizing learning those pivots and price action because that's the backbone of all trading and technical analysis, in my opinion. So you definitely want to get good at it. This can be an assisting tool, but it's not a. I wouldn't want to not understand pivots and how to identify them and use this indicator. It's a tool to help you identify those pivots, but still got to learn those. So again, NVDA daily chart. All right, here's our daily lower high resistance. I took a short there a month ago. Marks the key resistance, lets you know, we've got the key price coming up to test resistance, so helps with those pivots. Again, Mountain Mark does his own explainer video on our website. If you want to hear it straight from the horse's mouth, check it out. All right, Backburner, Superstack, Historical RSI, Trade Keeper, Trend Scout. Extremes, the first three are extremes looking for entries. The fourth, Trade Keeper, is helping you stay in trades, not necessarily entries and exits. And the Trend Scout is helping you identify longer term, well, not even long, depends on the time frame you're on, but helping you identify key pivots of support and resistance. All right. Thank you, Toby, for answering some questions along the way in the chat. I'm reading the chat now. Gassan, thanks for the compliment, but stick with it. So Gassan says, I explained TA well, but he still is not getting it. I'm using his nice phrasing. Stick with it. 6 months, 12 months later, people say, man, I finally get it. It finally clicked. It's like an epiphany. Just got to give yourself time. Some people take longer than others. There's nothing wrong with that. How much weight do I put in the golden death cross? None. It's a lagging indicator. Very late signals. Price pivots tell you way in advance. Poets love birds, appreciate it. Sane voice in a cloud of hype and noise. Thanks, Jason Wright. Oh yeah, bundle. We got a bundle. Forgot to mention that. Beck. So yeah, you can buy them individually, but if you want the 4 from the Chart Guys team, the bundle has a discount as well. I need to go back. So just scroll down a bit, 4-in-1 indicator bundle. It was already 20% off. I think they're 36% off. Buy in bulk. Is that superstack the same as the one in Trader Pro alerts? Not exactly. Same concept, very similar, but slight variations in the criteria for the triggering. But a high percent of being the same. Same coding. Again, what's the difference? This is more towards Trader Pro crypto alerts. It's different. These are TradingView alerts. You need a TradingView account to have them. But I'll just answer this quick question about the crypto alerts. Difference between overbought and oversold climax and superstack. Superstack has a bunch of time frames aligning. Overbought, oversold climax factors in volume. Superstack isn't concerned with volume. Doesn't the break of the green dots at 10:30 mean get out? Let's look at the trade keeper real quick. No, the dots are your signal. If it means get out, the dots go red. I assume you're talking about right here. So yeah, it's not the price dipping below or above the dots. That's what PSAR is. This is different than PSAR. You don't hit the dot and then it flips. The dot's got to change the color to flip. Utilize the indicators, can use them on any platform. So the way that it's got to be on TradingView. And the way that I trade is I got Fidelity and my broker on one screen. I got TradingView on the other screen. The charting on TradingView is leaps and bounds ahead of the vast majority of stockbrokers out there. So I would suggest using TradingView. I don't have any compensation from TradingView, but they did give me a cool thing. I would suggest using TradingView when you're trading because, again, it's Fidelity trading, it's not even close. So I place my trades through my Fidelity broker on this screen while I'm watching TradingView to make my trading decisions. And there are certain brokers where you can link to TradingView and they can be as one. Which are my personal favorites? Again, Backburner. It's not even close. Backburner, then Superstack, I would say, if I had to say the two that have been most useful for me in my trading career. There is a bundle Brux, but it's not pick and choose bundle. It's not like I want these two. It's the four of them. How do you determine when a high or low is set? That's a long explainer. Got to go to YouTube, look at Joey's webinar playlist, and there's 6 hours of content that is essential. But there's one of the, I think it might be the first one, identifying those pivot points. So go watch that hour-long explanation because that's what is required to answer that question. Definitely can't answer it in a couple sentences. So recently, coin went to 250. He entered at that price, didn't have enough data or conviction, pulled out at 253, and then it went up at 270. TradeKeeper, the right tool, definitely can help. I would say, TradeKeeper as a tool, obviously, but the most important thing is establishing your trade game plan in advance. The number one issue that traders have is they act on emotions, right? If you don't have the trade game plan, essentially when I enter a trade, I know where my stop is and I know where my target is. And if neither of those levels are being hit, 98% of the time, I'm not acting because neither level is hit. So I let the trade play out until I either stop out or my target is hit. Only two things happen. If a trader doesn't have that game plan laid out in advance, again, every game plan is your entry, your stop loss, your target. If you do not have that trade game plan laid out in advance, you're sitting there reacting to price. And you're reacting to your emotions. Oh, we just dropped hard the last 30 minutes and, my stop or my target isn't hit, but I'm going to sell because it's not as strong as I thought. You've got to eliminate your emotions from dictating your decisions. And the only way to do that is with a set in stone game plan with orders laid out that allow you to act on that game plan, and you don't do anything otherwise. You know, natural gas. I'm in a natural gas long. We just gapped up huge to start the week. Everything in me is saying sell partial position, but it's not part of my game plan. In the end, you know, it would have worked out to sell partial position because we pulled back fairly hard from that gap up. But my game plan is a long-term position looking for significantly higher from here. And I'm either going to stop out break even or we're going to hit that target. And the risk of micromanaging is you then sell a position and then it plays out the way you thought it would long term, but you didn't get the ideal reentry. And now there's so many times where that's happened to me, where it's like my trade is on the weekly chart, but I'm confident I can maneuver on the hourly. And then I, have less position than I would have if I just let it ride out. Got to stick to those game plans. Definitely suggest multiple monitors, bare minimum 2. I used 1 monitor on a laptop for a long time, and when I went to 2, I felt like an idiot. Like, man, I should have done this years ago. What was I thinking? Recommended trading view plan for best use of these indicators? It depends on the individual. Are you a serious trader? Is it a hobby? Things like that. Any of the paid plans will give you the basics of what you need. But you also want real-time data. That's key. Again, if you're a serious trader, you got to pay a few bucks a month for real NYSE data, because otherwise your price levels are a bit different than the real data. Your volume is a bit different. If you are serious, you gotta fork over the bucks for the monthly data plans on the markets that you're trading on TradingView. How much does the drum circles help my mindset for trading? I don't do drum circles that often these days. Let's encompass nature, outdoor activities massively. It's extremely important to have that mental reset when you're grinding, looking at the blue light screen for thousands of hours. You have to have that reset. But it's different for everybody. Me taking a hike in nature or doing a drum circle, hippie thing, whatever, someone else gets that from playing golf. I don't. It's, everybody's different, but you got to have your outside, ideally outside, touching grass, escape to reset your brain, reset your emotions, and stay balanced. Thanks, David. Good to see you too. Just did a crypto live stream yesterday. Not going to comment on Bitcoin here. Indicators are one-time payment. Toby's answering questions in the chat. Toby is the brains behind some of these indicators. Trader / developer / website creator. Thanks, Daniel Ritter. See you in Slack. Happy to help. Cores. What time frame do I use to confirm horizontal breakouts? All of them. Again, it depends. It depends. If I'm looking for a swing trade, I'm on the weekly and the daily, and those are the most important pivots for me. If I'm day trading, the daily pivots matter, but it's much more about hourly and 15-minute and 5-minute time frames. So it depends on what is the trade setup that I'm looking at. If I'm looking for an hourly high or low, I care about the 5-minute. If I'm looking for a daily high or low, I care about the hourly. Again, Joey's webinar series goes very in-depth to answering those. Toby's answering those questions. Thank you. Thank you, Swag. So, TradeKeeper, I forgot to mention that. Let's go back. TradeKeeper. So you can change the settings to go slow trail or fast trail. And that just essentially means how sensitive are the triggers going to be. You know, if you're a scalp trader, if you're on their short-term time frames, if you want to be locking in smaller moves, you're on fast trail. If you want to be a little bit zoomed out, let it play out a little bit, give it a leash. You know, I often say I want to give this trade a longer leash. And that just means I'm willing to sit through more fluctuations to try and let the longer term move play out. So that's what slow versus fast would do. A fast is a tighter leash, a slow is a longer leash. Crashed any lawn? I have not crashed the lawnmowers. So here's a good lesson. Psychological barrier. So I've crashed my lawnmower multiple times. We're off topic now, but I've crashed my lawnmower a couple times in this one spot in my backyard where there's a hill, and if it's slick, I slide off into my flower bed, and I then have to, with the help of Joey, rig up a primitive wench, which is a bit dangerous, to pull this, 800,000 pound machine by hand using a wench. Look up a primitive wench. It's so cool. And it works. And then I put up a piece of wood. And that piece of wood is not enough to stop this lawnmower. If I slip, I'm going right over that wood into this flower bed. But the visual of that piece of wood being there is my reminder. It's like a bumper in bowling, putting up the bumpers over the gutter. It reminds me every time I see it when I'm going near it, slow down, be cautious. And that's almost like, just writing down your trading rule next to you on the computer, where if you're in the heat of the moment, I don't need a stop loss, I'm on top of it. You look down, capital letters, place your stop loss, idiot. It helps keep you, it's a reminder. See how I tied that into a trading lesson? Toby, definitely a genius, highly motivated individual. Nix loves a trade keeper. Glad to hear it. All right, I'm wrapping it up. Thanks for spending some of your Saturday afternoon with me. I got to get out and chainsaw more wood, which is the story of my life the last couple of months. But feel free to ask any questions. Feel free to email support@chartguys.com. Toby would love to hear from you. And make sure and check out the other individual videos describing these indicators more in depth. Reposting the link. Appreciate you all. Thanks for the support. I just put out a quantum stocks video a couple hours ago. Check that out on our YouTube channel. And we will see you all real soon. Have a great weekend.